Thank you.
That's exactly right. You know, I was going to say, why didn't you just tell everybody to buy T-bills or put your money in the money market for 12 months while this nonsense was going on? But you did me one even better. Sorry. Why not be like Paulson and just tell everybody to short everything? Your clients would have made 100% in 1 year. I don't get it. It doesn't make any sense. So you were right on the prediction, but wrong with what people should have done with their money. Maybe you should be a politician. I know you ran for Congress. Was it Congress or Senate? Yeah. One of the two. He says the most important reason some people lost money following my advice, the dollar didn't collapse. Well, to that, I'll have to say a great big Simpson, duh. Or I should say, the dire warning. We needed one of those laughs.
The maniacal laugh.
Yet.
Maniacal laugh.
Maniacal laugh. Insert soundtrack. You know, I don't know. You know, I don't see this is the great thing about being a money manager the way we do it. I don't know what's going to happen. I don't know when or if the market collapses. I don't know when or if the dollar collapses. I do know the best way to deal with this is to invest in equities over the next 30 years, diversify your portfolio, rebalance on the highs and lows, ask yourself questions like, what is your true purpose for money? What is the real risk in my portfolio? What is my investment policy statement? And stop gambling and speculating with money. You tell us in your book that it's not gambling and speculating, but that's precisely what it is. So what you're saying is, you know, listen to me now. You know, okay, well, I wasn't exactly right in the past, but listen to me now. And believe me, just kind of like this clip
Thanks to all the other recurring characters.
Yes, hear me now and believe me later. Enjoy your popularity while it lasts, because it all ends up in this death right here.
That's right, Hans. Yeah, that's right. You hear that, coffee talk lady?
Yeah, more like flabby talk lady.
Yeah.
No, hear me now. What's the line?
Hear me now, believe me later.
Hear me now, believe me later. You know, and he's been saying this for a long time. So we went back to March 2009, and then running through June 2012, and we started looking. This was at the end of the crash, and he was saying, look, you should buy international. Buy international stocks. They're going to do much better than U.S. But if you look at the growth of a $10,000 investment, for example, in microcap U.S. small stocks, for every $10,000 you invested in this index, you would have $26,000 today. From 2009 to 2012, June. Well, what happened when you invested internationally? You invest internationally in the IFA index, which is a lot of international high dividend paying stocks, exactly what he's recommending to have. Then your $10,000 investment grows to, let's follow it over, about $16,000. You just ripped yourself off of $10,000 of growth. I mean, that's the problem with forecasting and predicting. Although not only that, but we were on TV around March 2000.
It was a little bit later, September 2011.
September 2011. Okay, here we go.
Although I am definitely bearish on Obamanomics here, I'm always a long-term bull. Last week was a perfect example. The market had a 17% slide off. And imagine this, at the beginning of the week, if you knew there was going to be a major hurricane, a major earthquake, Bernanke wasn't going to come out with QE3, who would have guessed that it would have gone up 8%? And the reality is, anyone that tells you they can predict where the market's going in the next 10 days or 20 days, or even a month, they're lying. The market is random and unpredictable. You have to own it long term. Equity premiums only show up over 5, 10, 15, 20 years.
All right.
Stop trying to time it in the short term.
Hey, Peter, look at you. You made a living telling everybody what's going to happen. So what's going to happen here? I mean, I'm not trying to ask, isn't this bad
first of all,
news?
the Bears have been getting beaten up for 11 years now. So, it's a long wait for things to turn around. 11 years ago, the Dow was worth 43 ounces of gold. Now it's not even worth 7.
Mark, tell me what you're buying. What would I be buying with cash in September before Peter takes all the oxygen out of the room here?
So when we did an analysis of over 10,000 portfolios, and we found today the average investor is 70% fixed in cash, only 30% in equities.
If we went back 5 years ago, we'd see the exact opposite. 80% equities, only 20% in cash and fixed income. Largely from these predictions, from demographics, that the Dow was going to go to 40,000 by 1995. Obviously didn't happen. And then the reverse, everyone's predicting Armageddon because it's fashionable. The reality is, yes, you should build a globally diversified portfolio, but don't bet that U.S. is going to get tanked and only Europe is going to do well, or China, or Asia. You have to have both. We have over 45 different countries specializing in microcap stocks and high book to market value stocks. That's where the premiums are going forward. Don't get caught time to try and time it.
All right, Ronnie, let me read something.
And I'm going to be interested in taking some gold, trying to buy some stuff at Walmart. I'm going to see how that goes.
Don't get Schiff started on this.
Well, you can do it with my credit card.
I know, his credit card got active. Paying Peter Schiff every time I use my credit card right now and try and be nuts. All right.
From now, unemployment is going to be a lot higher than it is today. They might be launching QE4. They're going to keep on printing, and they have to keep interest rates at zero. We now have so much debt that if interest rates just went up to a historically normal level, the government would have to default.
I hear a lot out there that equities have been dead for the last 10 years. It's just not true. They haven't. Microcap stocks are up 10% per year over the last 10 years.
Look at Ron Paul's portfolio.
Europe, small value international stocks up 12%. Emerging market stocks up 15%. The problem with most investors is they're so myopically focused on which way does the Dow going to go, they don't bother to build a truly globally diversified portfolio. You should have at least doubled your money over the last 10 years if you had a diversified portfolio.
All right, well, listen. You gentlemen all been great. We've actually sold nothing so far, so I'm going to have some of you back. All right, good. Thanks for coming out. All right.
Evan says one of the signs of truth is the soundbite still works no matter when you play it.
Absolutely.
Yeah, I thought that was a great, sound clip, and that's standing up to the bullies. That's putting your reputation, your philosophies, your theories, your values in the arena of ideas and fighting the good fight. It's the same story now as it was back then. You can't predict it. You can't forecast it. That's why you have to be prudent and diversify. And if you look at the results, if you go through here, and you can see September 2011 through June of 2012, this is, I think this is Peter's gold fund. You can see $10,000 since the September of when we did this interview. His gold fund is down significantly around the $8,500 mark during this period of time. So apparently it hasn't been a good period for gold, has not been a good period for international, and that three-legged stool is falling over, Peter. Not working too good.